Hey guys, this is Justin from nextbigtrade.com. Welcome back to the channel and Happy New Year. In this video, I want to give a market overview as we head into 2022. I want to talk about leading sectors that I've been watching in the market currently. And specifically, I want to talk about the electric vehicle sector, which I believe, based on action I've seen recently, could be one of the leading sectors in the market as we start this year. As always, I'm going to be talking about this analysis from a stage analysis perspective, and to get more information on stage analysis, check out my website at nextbigtrade.com. And the disclaimer here, this is for informational purposes only and is not investment advice, and I may hold positions in stocks mentioned in this video. So to start, I want to talk about two quotes from Stan Weinstein on sector analysis that are very important. Stan Weinstein talks about sector analysis as being one of the most important factors to finding big winning stocks in the market. And in this first quote, he says that after observing a lot of market cycles, sector analysis can actually be even more important than overall market timing. And this happens in particular when you see certain sectors performing well when the overall market isn't doing that well. And I think 2022 could actually be one of those years, because we're coming off two strong years of the S&P 500, and it's possible the S&P 500 underperforms to a certain extent this year, while other new emerging sectors might take leadership in the market. And the second quote is that sector performance has a huge impact on individual stocks. A stock in a bullish sector the performance can be dramatically superior to a stock in a bearish sector just because of its group. And that's really important to emphasize when you're studying stocks. You always want to look at what sector the stock is in, and if the sector as a whole is acting well, that should give you huge confidence that could be one of the leading sectors in the market. So now just to talk about the general market as we head into 2022. On a recent article on my website, I talked about 2021 is essentially being a sideways bear market. You can see that here in IWM. It's a really good depiction of what kind of happened last year, where the price action went sideways for most of the year with a lot of volatility up and down, but no real progress. And what really happened underneath the surface is that certain parts of the market, ARK is a good example, we're under a lot of pressure. It's not surprising that ARK was under a lot of pressure last year, though, because it had such a good year in 2020. So to see it give back some of these gains, it was up 300% last year, or in 2020. Totally not surprising, but it was a pretty significant bear market year for this ETF. I think it's probably closer to transitioning into stage one now that it's had a significant moved lower, and you can see the volume here has actually increased recently, which is you see these types of volume signatures when there's kind of like panic selling in the market and bottoming type volume. So, and also this ETF is pretty stretched to the downside. So this is an example of something that did poorly in 2020, but then you had large cap tech. Obviously Google did really well in 2021. But the key thing here is that I think large cap tech now is going to be underneath a little bit of pressure here. You can see how Google is starting to move into the 30-week moving average finally, after being in a stage 2 uptrend all of 2021. And this is going to have a significant impact on the market because of the weight of FANG, these large cap tech stocks in the S&P 500. So it's possible this causes some volatility as we head into the early part of this year. And overall, I think large cap tech has had, many strong years now. So I think it's really not out of the ordinary to see something that's performed this well move into stage 3 and perhaps consolidate its gains. You can see on the relative strength here too against the S&P 500, it really barely had any outperformance actually against the S&P 500, even though it's the top 100 technology stocks. So it shows that the S&P 500 is kind of changing underneath the surface, and tech's not really the outperforming part of the market anymore, which transitions me into the next part of this video. I want to talk about really what's starting to leave this market as we head into 2022. Financials is one of those sectors. You can see here that the XLF broke out above resistance last week on an increase in volume, and it's starting to outperform the S&P 500. It's really important to see XLF, the financials, breaking out here because, there's talk out there that maybe we're transitioning into a bear market. But if you look at what happened in the year 2000 and in the year 2008, the financials were in a stage 4 downtrend for multiple months before the overall market topped out and moved into a stage 4 downtrend. So here, seeing the financials breaking out in a continuation breakout in stage 2, really makes it less likely that the overall market would be moving into a bear market, because one of the most important sectors, the financials, is not, in fact, is doing the exact opposite and is breaking out. So that tells you that the market is probably more in a transitional, rotational type of phase versus a bear market breakdown type of phase. So that's important to note about the overall market. Oil and gas stocks, really, I think they only broke out into stage 2 from a multi-year bear market, which I'll show next, last year. So they're only in year 2 of their stage 2 uptrend, and they really had to fight through a lot of that sideways bear market in 2021, which is why they were so volatile here. So I think like breaking out of this big base and getting out of the 2021 pressure of the overall market is really going to benefit the oil and gas sector. I think this is going to be, one of the potential best leading sectors of the market in 2022. And we're already seeing that in the way the integrated oil and gas, the highest market cap stocks are acting, and in other stocks in the sector. So I think, again, that's going to be a place to keep an eye on in 2022. Again, XLE, oil and gas stocks were in a bear market for 6 years leading into the breakout in 2021. So this is not something that's been around for a while. That's, there's still not a lot of attention in this sector. There's a lot of disbelief, and that's exactly what you want in an early uptrend to see, is people not caring about it, but there's really a lot of performance there and a lot of new breakouts. That's an exciting place for me to be as someone that uses stage analysis to trade the market. Now, moving to the EV auto sector, which again I believe looks to me like the leader, I think, in the markets as we're starting 2022. This is the CARS ETF, and it completed a stage 2 continuation breakout last week on heavy volume for this ETF. It's really not a widely traded ETF as of yet, but look at the volume signature through all of 2021. It's definitely ramping in this ETF. And this is an ETF exposed to the auto industry overall, not just EV stocks, but auto stocks in general. But what a lot of auto stocks started doing in early October last year is breaking out on volume. But then the pressure in the overall market and the recent stock market correction pushed many of these stocks back down. And, a lot of them made moves higher again last week. So it's like they're reigniting their breakout that happened a few months ago. And what the problem was the overall market putting pressure on even this sector. So, and this happens in when you look at stage 2 breakouts. Sometimes pressure from the overall market can temporarily suspend a stage 2 breakout, and it just happens again a little bit later. Once the pressure from a correction moves through the markets, then the sector can resume leadership. So that's I think what is happening here. And again, you see the volume signature is huge in this ETF. Turning to what I believe to be the leader in this sector currently is Ford. I want to talk a little bit about what happened with the stock last year. It broke out into stage 2 in the beginning of 2021 on heavy volume out of a massive base, and it had another breakout in the middle part of 2021. But the key thing to look at is that, again, the overall pressure from the 2021 sideways bear market wreaked havoc on even this stock, and it wasn't able to make a lot of progress on those two stage two breakouts because of the overall pressure. And once the overall pressure started, like in September, October 2021, is when a lot of stocks started making breakouts again and the market started behaving again. Then you saw this stock start moving higher, and you saw the volume finally come in, a few weeks late in October. So it really started to accelerate. But then again, another correction rolled in. You saw pressure on forward. It kind of consolidated and went sideways, but it really went beautifully sideways in a tight consolidation pattern and then broke out again on massive volume last week. And this is another reason why I think that we could be coming out of this correction, is because you're seeing a stock that's really leading the market finally coming out in a big way and breaking out on huge volume. So this is a really important thing to see in the markets, and I think it gives me a little bit more confidence that we could be finally maybe moving out of this correction to a certain extent, and maybe getting into more of a market that can be healthy for a leading sector like this. And again, Ford is really exciting because it's breaking out of a multi-year, like basically decade-long base on huge volume and just starting its bull market with a new continuation breakout last week. And when you look at leading sectors, you want to see multiple stocks in the same sector start to break out. That's what we're seeing here. Toyota also broke out in a stage two continuation breakout last week on heavy volume, 2.5 times weekly volume. And you can see it's outperforming the S&P 500 here. GM broke out as well. GM kind of fell back into the breakout area. So I want to see this stock kind of follow through next week because you don't want to see breakouts fail, obviously, in the leading sector. So that's what I'm looking at with GM. And this is Tesla. Now, Tesla, obviously, huge leader in 2020. It's rare to see a stock that performed this well continue to lead, but it's in the right sector. And I believe that, obviously being an EV stock and the EV leader, it could, still be a leader, maybe not the leader, but, obviously a leading stock. And it did start to do the same thing as Ford. I think it's kind of facing a little bit more pressure recently because it's kind of a high growth, high P tech stock, which those came under more pressure last week or recently than other auto stocks have. So that could be the reason why it kind of fell back in more. But again, still looks pretty good and is still solidly in stage two. Lucid obviously is another of these new EV stocks that broke out on massive volume in October. This is actually one of my biggest trades last year, catching this original stage two breakout and playing this move up. But Lucid broke down again with the market pressure last year, and now is kind of recovering. But I think it's actually starting to recover its original stage two breakout. You saw it pop up here on pretty good volume, and it's a good sign to see for the sector. So I think it's really resuming its stage two breakout here. Now I want to go through a couple of these other EV stocks that have broken out recently but fell back. Gores Guggenheim is one. It completed a stage two breakout but fell back in and potentially could be basing here and setting up for another breakout again. Same thing's going on with Fisker. Big volume move up, comes back down, consolidating. QuantumScape has kind of moved back more into stage one, but again, could break out again here really easily. Same thing with EVgo. This is a charging station stock, and then GoEV is a stock that broke out on a huge volume last year. Again, it's re-entering a stage one base. But these are the stocks you want to keep on your watch list, because what could potentially happen is that these EV stocks could have a wave of breakouts like Ford in these stocks right now, and then another wave down the road with these stocks that are still in stage one. So that's it tonight for this video. I hope you enjoyed it. Definitely, again, like and subscribe, and hit me up on Twitter. My handle is NextBigTrade. I'm pretty active on there. So we'll be talking to you again in the future. Take care.